Welcome, I am Ernie Goss, McAllister Chair in Regional Economics here at Creighton University in beautiful downtown Omaha, Nebraska, reporting on our business conditions. That's business conditions for the month of April. Here I am on the first business day of the month of May, reporting on those April numbers. And of course, the overall index, which I'm reporting on, and all our indices range from 0 to 100. 50 is growth neutral, above 50 is growth positive, below 50 is, of course, growth negative. Okay, now what did the results show for the month of April? Well, not as good as we'd like to see, but still above growth neutral. The overall index was above growth neutral for the third straight month. However, its first decline in 4 months. The overall index moved from 50.6 in March, 50.6, which is obviously not that strong, to 50.1 in April. Now, this is, of course, not a strong number. We're seeing it, and I'll talk about the manufacturing sector shortly. Now, here I'm going to bring up a graph that shows the Mid-American index. That's in beautiful Creighton blue, and there you see the U.S. number, which will come out later on this morning for the month of April. And you see it's sort of, I'll call it flatlining, and that's what we're seeing here. And that's what we've been seeing for several months now. The job index, which is even lower, moved from March's number of 45.9, which is obviously not good, to April's 45.0. Now here's the good number. The good number was export orders, 57.6, and that's up from March's 50.0. And not to bring in a little politics here, we've got 5 presidential candidates left, and every one of them is speaking nonsense about trade. We need more trade, not less trade. So I'll get on my put on my political hat there. Trade is good for this part of the country. It's good for the nation. Wholesale inflation gauge moved up from 62.2 to 62.4, so that's not bad. Getting a little inflationary pressures there at the wholesale level, not a bad thing. Now we ask these companies, these are purchasers, by the way, buyers, supply managers. Now that we ask them about how does data security influence who you do business with? 8.4% of the survey participants indicated it was the most important factor when they considered buying from a company. 27.7% said it's second only to price in selecting who you buy from or which company you buy from. And about 24.1% said it's only a minor factor. Of course, the rest indicated it was just one of the important factors, among many factors you look at. So data security is becoming very important, and it's true for these purchasing managers in selecting vendors. Now, back to the jobs numbers. We asked about that. And we looked at I was looking at the job additions. That's for the U.S. and it's coming from the Bureau of Labor Statistics. The region, that's a 9-state region, again stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south. The region lost 26,000 manufacturing jobs over the last 12 months. Not good. Of course it's not good. That's a 1.9% decline. Real concerned about the manufacturing sector. Now the good news, we got, again, back to the export order number. That's going to help in terms of that jobs number. Now that's at the same time, if you look at the overall broader economy, not just manufacturing, for the 9-state region, added 89,000 jobs over the last 12 months. That's 0.7%. Still not that good, of course. Manufacturing is bringing down the overall state economies that we survey, and of course that's not good. I think it will improve slightly in the weeks and months ahead as, again, if these trade numbers hold up. Now, what should you watch for in the next month? What are the indicators that you should keep an eye on next month or two, that is? Oil prices daily. I'm looking at a range between 35 and 65. Getting outside that range is a real concern, of course. And so in that range, we're full steam ahead, I think. Well, full steam ahead is too strong a word. We're going to be doing okay. April jobs number comes out this Friday. That of course is May 6th. A number below 100,000, a concern, because as you know, the Bureau of Economic Analysis announced that GDP growth for the first quarter in the U.S., and that's annualized, was below 1%. This is the weakest recovery since the Great Depression of the 1930s, so that's not good. Keep an eye on the PMIs. Those are the numbers we just announced, the Purchasing Management Indices, the ISM indices. And that'll come out, as I said, later on this morning from the national. I think the national number will probably be up to 52. That's a reasonably good number. We'd like to see something above 60, but not going to have that. Keep an eye on gold prices. Now why? Well, gold prices are starting to show a little bit of an issue with inflation. Now, why would that be an issue? Because if we see too much inflation in there, the Federal Reserve will raise interest rates. Now, it's not going to come until June, but we could see a rate hike in June. That's a real concern. Now, what are the risks? Those are things you need to keep an eye on. What are the risks? The Brexit. Now, what is Brexit? That's the exit of Great Britain from the EU, the European Union. They're going to vote on it on June the 23rd. If they vote, the citizens vote to exit, that's going to create real global risk. The global risk will rise, and I think that's certainly an issue. We never like to see increasing risk, and that's an issue. Puerto Rican debt restructuring or even defaults, $70 billion at Puerto Rico, the sovereign debt of Puerto Rico. That's an issue. 70 billion, if a default would be an issue, real issue. More profit deterioration, that's another risk, and everybody's saying, well, corporations never made so much money. No, corporate profits are down, and that's certainly an issue. Well, that's it. That's it for the month of April. Here I am, first business day of the month, as I'm always here the first business day of the month, and thank you for viewing this video. Until we meet again, may your economic cup runneth over, and thank you.